This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices higher this morning, this after a mixed to lower trade in the overnight session. In fact, we did have the S&P 500 now advancing to a new historical high. Some of the strength linked to the better than expected National Association of Home Builders index coming in at 58. The guess was 55. Also, we had the producer price index coming in up 0.2%. The guess was down 0.1%. So this market seems to be very well underpinned by what appears to be strength in the U.S. economy. We continue to feel that interest rates will stay low for a very long period of time. So our outlook for stock index futures has not changed. Continue to look for higher prices for the rest of this year and higher prices well into next year. Over in the currencies, starting to see some signs that Europe may be turning the corner. A couple of days ago, we did have the Eurozone GDP coming in just slightly better than expected. But also we had today an index of investor sentiment coming in substantially better than anticipated. Also, we do have many traders, and the consensus view seems to be on the euro currency very bearish and a very negative outlook. So I think traders are factoring in too much of a bearish scenario for the eurozone. So I think we're very close to finding some type of major support here in the European currencies, the euro currency and the Swiss franc. Also now with the dollar over the last week or so advancing to 7-year highs, I think that will eventually have some type of negative consequence as far as our export business is concerned. So I think into next year, I think we will probably see some pressure on the US dollar and better prices for the European currencies. Now this is a gradual situation. This is not going to happen overnight, but I anticipate a better Europe and possibly slightly weaker U.S., mainly because of the dollar strength that we have seen recently. Over in the interest rate markets, futures trading higher. Of course, we have Japan in I would call not quite political turmoil, but some very serious political conditions arising there, with the Prime Minister in Japan calling for the dissolution of Parliament on November 21st. So flight to quality buying coming into treasuries. Still thinking that overall the global economy is likely to remain relatively weak. So inflation globally I think will stay very tame, which is very conducive to additional long-term gains in treasuries, especially at the long end of the curve, mainly the 30-year treasury bonds. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.